Hello, hello. Good morning. Happy Wednesday. Jamie here. When you guys jump on, say hey. Right now, I am broadcasting live. So I'm broadcasting in my financial literacy for women business owners Facebook group. If you're not in it, come join us, balancecfo.com/group. Men are allowed as well. So for those of you watching me, maybe over on YouTube, where I'm also streaming this, make sure you come join into the group. We are having lots of great discussions. There are thousands of us in there, and we're talking about all of these things. So it's a great place to come with your questions. I'm also streaming this live on my Balance CFO Facebook business page. So hi, Gabrielle. Nice to see you guys. Okay, we got some people jumping in. Great. So today we're going to be talking about an important topic right now. And this is really something that came up a while ago around this family leave. And so some of you guys may have heard about this, but there was this Family Leave Act that came out actually before the CARES Act even came out. And this related to, it was Families First Coronavirus Response Act is what it's called, FFCRA. And there were a lot of things in this bill, and we actually talked about it back then. That was one of the first lives I did on any of the stimulus stuff related to this kind of paid leave, that you were going to be able to get tax credits back for any paid sick leave, or if people had to take time off because they had to stay home with kids, things like that. So we talked about this a while ago, but it's kind of gone away because there have been other things that have taken precedence around getting PPP and EIDL and all these kind of avenues for free money. But now what we're seeing in a lot of the country is a, kind of spike. I know where I'm at, we're seeing a spike in cases happen. Right now we're kind of on the verge of whether school's going to be in person or online here starting in about a month. So there's just a lot of uncertainty going on right now. And I thought this would be a good time because I'm starting to see an uptick in people asking me about, well, wait a second, wasn't there some kind of paid leave we could get where we could get kind of reimbursement for leave we were paying to our employees? Yes. So we're going to talk about that today. Now, if you guys are self-employed, if you're self-employed and you're like, oh, never mind, I'm going to tune out to this one because this one's not for me, stay here. This applies to you too. Okay. So this is one of the things that's been most surprising for me in all of this legislation is it does seem like there has been some thought put into how this can apply to self-employed people. And it gets a little bit more complicated, and less self-employed people are going to take advantage of that because they're not going to be aware that some of this applies to them. Kind of similar to PPP, where so many self-employed people forever did not think that it applied to them because it was a payroll loan, right? But it actually does. Similar here, where you may be self-employed, you may not have any employees, and so you're like, oh, this doesn't apply. But in fact, you can actually get some money out of this. So stick with me and listen to it because I think it's going to be helpful. Okay, so this morning we're going to talk about this specific topic. I know some of you guys have some Q&A questions. I'm doing my Q&As now. I'll do some questions. I'll take some questions at the end of this, primarily related to the topic that we're talking about. And then on Fridays at 1:30 Central, I'm going live, and that's when I'll be taking more broad kind of Q&A questions. But I do think whether or not this applies to you right now, it might apply to you in the future. So you might want to stick around and listen to this because I think for some people, this may be something that rears its ugly head later, and you'll be glad that you listened to this and realized, oh, there's actually some help here that I can get. So let's dive into it. Again, we're talking about the Families First Coronavirus Response Act. We're talking about paid sick and family leave. So part of this FFCRA that passed all the way back, what seems like ages ago in March, right, was this idea that they realized, okay, we're going to see an uptick in people who need to be paid, like either they have COVID-19, they've been diagnosed, or they're seeking diagnosis, or they've been asked to self-quarantine by a healthcare provider because maybe they came in close contact. Or this also applies to people who don't have childcare options, and maybe their childcare is closed due to COVID-19. So I think we would have hoped that we weren't going to be having this conversation now, but we are, right? Because this is a real thing that's happening. I've seen so many of you guys talking about how, it's getting closer to home. And so let's talk about what you can get. There's free money you can get from the government. So I'm going to walk through this a little bit. And again, I'm going to kind of split it into, here's the reason for the leave. Here's what kind of leave you might be eligible for, depending on the reason. Here's how much reimbursement you can get. And here's how you claim your money back. Importantly, let's talk about who this applies to. Businesses with 500 and under employees is who this applies to. So if you have less than 500 employees, and if you're self-employed, okay, even if it's just you, this applies to you. All right. So now there's been this talk of this exemption for people who have under 50 employees. Okay. While there is a exemption kind of written in, a potential exemption written into the guidance, it does say you're not required to provide this leave if you have under 50 employees, and this is the important thing, it's not an automatic, it doesn't say, okay, if you have under 50, you just don't have to provide this leave to your employees, right? If an employee requests, you have to provide this leave unless you have under 50 employees and you can prove that essentially to pay this leave would cause a hardship for your company. Now remember, this leave can be entirely reimbursable by the federal government through payroll tax credits. And we'll get into what that means here in a minute, okay? But importantly, if you're in a situation though, where you have to pay it out, I mean, it's leave that you pay as an employer. So just like you would pay any other paid leave you might have, like vacation, you would pay for this leave for anyone claiming it. And they would, be requesting, hey, I want to get this leave. I have been diagnosed with COVID. And you'd say, okay, provide me this information. We'll get to that in a minute, what you need to kind of document about it. And then you'll be able to say, okay, you can take this coronavirus leave, right? And then you pay it. And in your federal, again, if you're not self-employed, but if you pay payroll, right? In your federal or in your payroll tax reports that you do quarterly, you would essentially claim this payroll tax. And depending on, you're going to want to work really closely with your payroll provider. They're going to be in the know on this. They better be. If they're not, you need to switch. Okay. Y'all know I talk about Gusto all the time. They are on top of all of this. I've actually been talking about them with them. But Gusto is one of the payroll providers that's been just on top of everything. So I want you to be in touch with your payroll provider, because if this is something you want to do, you would say, hey, I want to claim, you would tell them like, look, okay, 2 weeks of this paid leave for this person was related to COVID, and I want to claim the payroll taxes. And they will then, when they file your reports at the end of the quarter, they'll adjust it such that your payroll taxes. Now, what am I talking about when I talk about payroll taxes? This is the employer side of Social Security and Medicare I'm talking about. Okay, so 7.65%. That's what you pay on each employee, right? They pay their portion, you pay your portion. So that portion you can get a tax credit for. All right. So basically being, if you paid an employee $10,000 in leave, right? If you paid an employee $10,000 in leave, then, and that may be a big, like, let's say you paid them, actually it's going to be limited. So let's say you paid them $5,000 in leave for 2 weeks. Okay. What you would then do is, against all your employees, you would say, okay, I owe $7,000 total in payroll tax across all my employees. I'm going to reduce that by the $5,000 in wages that I paid to the person that took leave. Now, obviously, if everybody takes leave, and there are reasons that might happen, right? If you have to shut down and everybody has to go into quarantine, you might have to do that. Then that gets a little bit tougher. And we'll talk about what we do in that situation. But basically, it will reduce your payroll taxes and you don't have to pay them on that quarterly report. But you need to be in really talking to your payroll provider about all of this. And they will and should be in the know. If you do payroll through an accountant, make sure that they are in the know on all of this and understand the fact that you can claim these payroll taxes, which will reduce them. So you pay it, right? But then when you file your payroll tax reports, you basically get it back. Essentially, it reduces the amount that you have to pay out for your payroll taxes. So that's why it is a 1-for-1. And we're going to talk about some of the specifics here in the morning. I did a whole chart about this. So yes, so I just saw this question. Yes, so this is about EPSLA, so Emergency Paid Sick Leave Act. Yes, you're in the know on that. It's also about the Emergency Family Medical Leave Expansion Act, FMLEA. It's a lot of letters, right? But basically, this is the portion of the Families First Coronavirus Response Act that set up payroll tax credits that you could get back for any sick leave or family leave that your employees or yourself, I'm going to keep saying it, as a self-employed individual, and we'll get to how this works in a minute, have to take. Okay, so we're going to talk about that. But yes, that's exactly what it is. Okay, so how does this relate to the excerpt from sites discussing this? Employees who receive a CARES Act PPP. Oh, yes, I love this. Thank you, Mark. This is a great question. PPP loan are ineligible for employee retention credit. Employees can receive PPP loan and FFCRA tax credits, but cannot receive PPP forgiveness on wages that are eligible for. Yeah, okay. All right. So what you are saying, again, so many letters, right, y'all? Like, goodness gracious, how many acronyms can we put out there? What this is saying is, if you got PPP, if you got a PPP loan at all, doesn't matter if it's during the time you got the PPP loan, it's at all. If you got a PPP loan, currently you're not eligible to take what's called the employee retention tax credit. That's tax credit for keeping your employees on. That is not related to paid sick and family leave. The employee retention tax credit, I do believe, was part of FFCRA, if I remember. But it's different from what we're talking about. We're talking about specifically leave for if people have to take paid leave, right? Then you can pay them. Now, you can have PPP and still take advantage of this paid family leave tax credit. You do not, however, pay the leave with your PPP funds. So let's think about what that means. Okay. I have PPP. We're going to go with the 8 weeks because that's easier for my brain right now. I have PPP over 8 weeks, and I'm paying my employees, and one of them gets sick, right? So you could, if you wanted to, you could continue to pay them with PPP funds. That's fine. And then you don't have to do any kind of payroll tax credits, whatever. You can continue to pay them. Sorry, my children are running around in the background. You can continue to pay them with your PPP, but then you can't claim the payroll tax credit because you're basically double dipping, right? You're getting forgiven for that amount and you're getting the PPP tax credit. But what you can do is not use PPP for that. Use PPP for other payroll expenses or other expenses that you have, right? And especially with the extension to 24 weeks, you should have plenty, right? Hopefully, most businesses will have plenty of payroll or something like that they can pay. And just use it for other payroll and then use kind of your own money, essentially, your non-PPP money, to pay this family leave. And then, as long as you're not claiming that for forgiveness, you basically would adjust it out of your forgiveness application. So you take your total payroll minus the amount paid under FFCRA, and that's what's available for forgiveness. But for a lot of people, they're paying way more payroll than what they got for their PPP loan over that 24 weeks anyway. So it's totally fine. So it just gives you extra PPP money, basically. And then you can also claim this payroll tax credit. So you can get both, right? You can get your PPP and you can get your payroll tax credit. And you can also get it when your PPP runs out, right? So you can get both. This is not an either or situation like the employee retention tax credit is. That's a story for another day that we will get into. But for today, we're just talking about paid leave. Okay. So let's jump over to, I made a little graph and I hope you guys can see this. If not, I'm going to, no, you did not miss how long you're paying the employee. I'm going to show you a little chart that I made because it is much more easy. I can talk about this, and you guys will be all spinning. So I'm a chart person. I don't know who else is. Some of y'all might appreciate this, but I made a chart right before we got on here to kind of help see this visually so you can look at it. So I hope you guys can see this. It's a lot of words. I am going to post it in the Facebook group. So again, balancecfo.com/group. If you're not in it, come on over because that's where I'm posting all of this stuff that you can visually see. So I will put this up in the group so that you can kind of look at it a little bit more. But here it is. So again, I don't know how well you guys can see this. Probably depends on if you're on your phone, you're probably squinting, but I will post this over in the Facebook group. Okay. So the important thing here is basically what we're starting with is the reason for the leave. And importantly, you have to be unable to telework. If you can telework, right, perfectly effectively, then this does not apply to you, All right. So you have to be unable to telework. That has to be not a practical thing in your business, right? So you can do these leaves. Or in the case of if you're keeping a child at home, right, you have to not be able to telework effectively with a child. And there are some kind of rules around that. But let's really quickly jump in here and start looking at the reasons. So if you're an employee, or let's say, actually, you're an employer. We're going to go through the employer first, and then I promise self-employed people stick around, but it's really similar. So listen to what I'm saying to employers, because there's a lot of similarities other than the way that you claim it. The way you claim it is different for self-employed people, but the substance is pretty similar. So let's start with employers. So if you have an employee, first box, employee is diagnosed with COVID-19. You have an employee who has confirmed case of COVID-19, okay? Or an employee is advised to self-quarantine by a healthcare provider, all right? Or an employee is experiencing COVID-19 symptoms and they're kind of seeking that medical treatment, or maybe they've taken a test, but sometimes these tests are taking a long time to get back, right? And so they're quarantining for that reason, all right? Or an employee is subject to a federal, state, or local quarantine or isolation order. So that's kind of similar to what we had before, right? Where we are similar. Now, this applies as of April 1st on, okay? So in theory, some of you guys may be able to kind of go back and talk to your payroll companies. If you didn't claim a tax credit, there may be an availability for you to be able to do that. But we're gonna focus on like what this looks like in the future, right? For kind of the rest of the year here, if you have an employee that does end up having it. Now, the things I have questions about are, for example, employee advised to self-quarantine by a healthcare provider. What does that mean exactly? So what happens if somebody in your work gets it and everybody else has been in close contact, and then you decide, okay, well, we're gonna need to shut down. And that's happening to a lot of businesses right now, where it's like they're open, then somebody catches it and they gotta close, you know, they gotta wait out the quarantine for some of their employees. My guess would be yes, that would count. Now, the question around how much support do you need to have for this, right, is kind of a questionable thing. And I'll get into kind of the support that it does say here in a minute. But basically, it is on the employee, just like any other leave, right? Your employee would request it. Now, you are supposed to actually post, you know, just like other kind of announcements, you are supposed to post to let people know that this is available. Because right now, a lot of employers don't even know it's available. So how are employees supposed to know it's available? So you are supposed to be posting this around your place of work if you work in an actual physical location, so that employees are aware that this is an option. I think best case too, like if you find out this is happening, you probably should let them know that this is an option for them to claim, right? But if they don't claim it, you're not required to pay it. But there's some ethical, right? You need to make sure that they're aware that they can claim this. So if one of those reasons are the reason, then they're eligible for 2 weeks or 10 days or 80 hours, depending on how you pay them, right? Paid leave, and this is under the EPSLA. So this is the Sick Leave Act, Emergency, et cetera, Sick Leave Act, right? So they can get two full weeks paid. You know, and now it is capped. So the reimbursements are capped. So you can pay them their regular rate of pay up to $511 per day, plus any kind of their qualified health plan expenses that you would normally pay, right? So if you pay a portion of their insurance, then that counts as well, in addition to the $511 per day. So the total that they could be eligible for would be $5,110. It's $511 times 10 days. So if they had to be home the whole 10 days, that's what they could get and be eligible for. Now, you can pay them more than that. You can pay them whatever you want, right? Now, I don't know, like, so let's say they normally would make $700 per day. You could pay them the $700, but you can only claim the tax credit for up to $511 per day, okay? Okay, so how do I claim it? The big question, right? Like, that's great that all this exists, but how do I actually get the thing? Well, like I talked about, if you're an employer, you get a payroll tax credit on those quarterly payroll reports. So your 941s that you are filing quarterly that are paying in those taxes, those payroll taxes. Again, payroll taxes, Social Security and Medicare, 7.65% of an employee's payroll goes to that. You pay it as an employer. So that is the portion that essentially you get to kind of get out of, right? So in a lot of cases, if you have several employees, let's say, and only one employee is being paid this leave, then the amount that you're paying in payroll taxes in total on all your employees is probably more than the amount of credit. So in that case, you're great. You don't need to do anything else. You just claim the credit. You work with your payroll company really closely and tell them, hey, I want to take advantage of this credit. Here's the employee. Here's how much leave they get, right? So, and then you get the credit. But if you're in a situation, and this happens especially, like, let's say you only have one employee and they're taking 2 weeks off. Well, of course, by just taking 7.65% of their payroll, right, you are not going to, you're not going to have enough payroll taxes that you pay to cover that. So what you can then do is file Form 7200. And some payroll companies may file this for you. Some payroll companies will give you at least the numbers and have you file it. If you use an accountant, they should be able to file this for you. And it's just a form that says, okay, here's essentially how much payroll tax, or here's how much leave I paid. Here's how much I got back in that payroll tax credit. Here's the excess that I didn't get. And you can request that and they'll give you that money. I don't know how long the reimbursement takes, though. I haven't heard of any actual cases of people doing this yet. I know it's happening, but I don't know how long it's taking to actually get the money. So, but in theory, you get that money. Or you can wait and roll it if you know, okay, well, later on this year, I'll have enough payroll taxes due that I can take a credit against future, right? Then you can roll it, but only through December 31st. So work with your payroll provider on what the best thing to do there is and whether you need to kind of do this Form 7200. If you do file Form 7200 with asking for the excess, you have to tell your payroll provider, because they're going to be the ones who have to adjust then what they are, how they're calculating the tax credit in the future. Okay. So this gets a little complicated. Again, your payroll, whoever does your payroll or your accountant is going to be a really good resource for you on this, but it's important that you know it exists. Okay. Mark is asking, let's see. Mark is asking, is it 1 2-week period max for the same employee? Yes. So they get symptoms and seek tests, but are negative both times. They can't get, yeah. So it is maximum 2 weeks from the period of April 1st through December 31st. So that's going to get interesting here, but yeah, they can't just be like every week. They're like, oh yeah, I have symptoms and I'm going to, go get tested. Maximum they can get is 2 weeks. All right. So that is important to know. And I don't think it has to be consecutive. So I think it can be like, okay, I took 3 days off and now I have a couple, I think if you waited for the test and it was negative and you go back, then I think you're fine. But yes, it is a maximum 2 weeks per employee. Okay. So is this for part-time employees? Yes. So this also qualifies for part-time employees. There's some wording on the IRS website for how to calculate that, but it's basically based on what you normally would pay them. So whatever they would normally work 10 days, like if they work half time, then it would be 4 hours for 10 days, right? It's 10 days. They don't necessarily get 80 hours if they don't normally work 80 hours in 2 weeks. So it's important to know what their normal amount they would make in 2 weeks would be. Yes. So let me get to this here in a minute when we talk about self-employed, Nicole. But yeah, I mean, it's still a maximum 2 weeks when we're talking about paid sick leave. But then there's a whole nother thing on childcare. So let's jump into that one. All right. So you can also get sick leave if, let's come down to the second box here, your employee is caring for a child whose school or place of care has been closed or child care provider is unavailable due to COVID-19. So this is something that's happening, daycares are closing, different things are happening where childcare options are less and less. Some schools are going full online. And yes, this does count if you have to basically homeschool your kid online. You don't have another option to send them to school. If you have another option, I don't think that you can claim this. But if you don't, right, and they are going to be doing online schooling through their district, then you could claim this. It's for children under 18, although there are, I think, some additional requirements if they're over if your kid is 14 and over. It's a little bit harder. The documentation you would have to do is a lot more, right? Because you can technically leave a 14, 15, 16-year-old on their own. So you would have to document what the extenuating circumstances were that you had to provide care for them. But obviously for younger kids, it's a little bit of a lower threshold because obviously there's more more that you're going to need to do as a parent staying home with a younger child. So, so yes, employees can get this. And there's two different things. So this is where the two parts of this act come in. So you can get, again, similar to what we were talking about with sick leave, 2 weeks paid leave under the EPSLA. Now, I don't think you can get both. So I don't think you can be sick for 2 weeks up here and then take it for family. It's just a total amount under EPSLA of 2 weeks. So you kind of got to pick. And honestly, if you are sick, you probably want to take the sick leave, because if you come over here to what your reimbursement is capped at, if you're watching a child, it is lower. So you can only make 2/3 of an employee's regular rate of pay, up to $200 per day. So that's a lot different than if you're actually sick or seeking medical diagnosis. If an employee is, they get 511 up to 511 per day, maxed at their total, like what they would normally get. Can't pay them more than they normally would. But you're capped at 2/3 or $200 per day if you're watching a child. So, so that is a little bit different. So if you have the choice, if either one could apply, then I would do the 2 weeks of sick pay under EPSLA, because you'll get more. And so then I'm going to expand this, because this is kind of, yeah. So similarly, and it's going to work the same way. It's going to be through a payroll tax credit, exactly the same way as the sick leave would be. So the other thing, though, is once you use those 2 weeks, there's another 10 weeks that are available under basically what is expanded FMLA. So it's EFMLEA, right? It's another part of that act. But this one will give you another 10 weeks. Remember, FMLA is what people use, right? Like if they have a baby, oftentimes you would use FMLA. And this is job protected leave. You can't fire somebody when they're off on either of these leaves. You have to protect their jobs within reason, right? If you let everybody go, that's a bit of a different story most times, but it is job protected leave. And they can go on leave for an additional 10 weeks. And it's the exact same threshold, 2/3 of an employee's regular rate of pay, up to $200 per day. So the total, combining the two, if you take the full 12 weeks between the two, you can get $12,000 if you have to stay home and watch your child as an employee. And that's the payroll tax credit you can get back as an employer. You pay that to the employee. Again, you can pay them more. You can pay them their regular rate of pay, but the payroll tax credit is only going to be up to this max. Okay. That's what you're going to be able to get back, and you're going to work with your payroll tax provider to get it. All right. So before I get to self-employed, I am going to answer any questions you guys have for employers. Okay. Can they take 80 hours more than once? No. Meaning if a spouse is sick and they have to quarantine, then 2 weeks later. No. The max you can get per employee is that total. So you can't continue to do to claim it multiple times as of right now. That it is kind of a one-time thing, or again, like it can be 3 days here, 6 days here. Like the total, though, that they can get per each employee is maxed. Can you claim the credit if payroll is being paid with PPP? So I mentioned this earlier. Yes and no. You can have PPP and claim this, but you can't pay this if you paid that specific person's payroll with PPP. Then no, you can't get the reimbursement as well, because that's double dipping. You got free money twice, but you can just reduce that off of your PPP and use your PPP money for other stuff, and not claim that specific person, right, on your forgiveness application, or at least those 2 weeks that you paid them, you would exclude that. But you probably, if you use the 24 weeks, you probably have plenty of payroll, right? Okay. Does self-employed apply to S Corp owners, share owners? No, you're actually an employee. So you can pay yourself as an employee, although my guess on this is, and I haven't seen specific guidance, but I'm assuming it works similar to PPP, where the wages are just W-2 wages that count. So you can pay yourself your normal pay of W-2 wages up to the max and get the payroll credit for that, but not owner draws, because owner draws are investment type income. They're not income for compensation for services. They're not payroll. So for an S Corp, you would claim this as an employee of your own business, as a W-2 employee, you could take this. Yeah, so I talked about that at the beginning of this, about exemptions for under 50. It is not an automatic exemption. Okay, that's important. People are getting that twisted all over the place. Oh, this doesn't apply to me because I have less than 50. It does, but remember, you get this fully reimbursed. It's just a timing issue. So you pay it, you get it fully reimbursed. The only reason that you would have to have documentation, and I don't think you have to actually apply for the exemption to not do this, right? Instead, it looks like what it is if you're challenged on it, you need to be able to support the fact that basically, what the word they use is that this would put you at a going concern. It basically means that having to pay this leave would put you out of business. That for a period of time, if you had to wait for reimbursement from the federal government, you would be put out of business if you had to pay your employees this leave. That's a pretty high bar. So, and employees can challenge this. So I actually think most employers, even under 50 employees, will need to pay this. And again, you get the money back. So you might as well keep that employee goodwill. I know that if it absolutely is not possible, you will need to document why that's the case, right? Like you just have zero cash and cannot do it, and you will go under in your business if you pay this. But in most cases, that's not the case. Jamie said you can't get the tax credit for sick leave and childcare if school are closed. You can, yeah. Okay. Okay. You can if schools are closed. I don't think though, and I will look back and check on this, but it looks like, so what you can get is the 10 weeks. So you could get like 2 weeks of paid sick leave under EPSLA and then 10 weeks of FMLA for caring for your child, okay? Or you could get 2 weeks of caring for your child under EPSLA and 10 weeks under FMLA. You can do both. What I don't believe you can do is take 2 weeks of sick leave under EPSLA, 2 weeks of family leave under EPSLA, and 10 weeks of family leave under FMLA, if that makes sense. So I believe that essentially your total you can take under EPSLA, because it's one program, is the 2 weeks, I believe, per employee. I'm going to check that just to make sure that there's no caveat anywhere, but everything that I've seen leads to the fact that each employee gets 2 weeks of EPSLA, regardless of what you take the EPSLA for, whether that's sick leave or whether that is for family leave. But again, you still, either way, once you take those 2 weeks, you still have the 10 weeks of FMLA left if you're caring for a child. So yes, you can get both, but it's a little bit complicated as to how that works. Okay. Yes, I don't know who this is, but yeah. So yeah, that's what I had seen. I think at the beginning we were thinking that you would have to actually apply for the exemption. You don't, but you have to maintain good documentation for why you didn't do that. I think that'll especially come up if you have an employee who wants to take it and can't. They could challenge you on that. Okay, let's talk about self-employed now, you guys. So those are my self-employed people who have stuck around this long. Congrats, but a lot of this you're going to see is very similar. Okay, so if you're self-employed, diagnosed with COVID. These are going to seem like really, this is repetitive. You've been diagnosed. You have had to self-quarantine. You have, you're experiencing COVID-19 symptoms and seeking medical diagnosis. Or you are subject to federal, state, or local quarantine. This is all if you cannot telework. Now, if you're so sick you can't telework, that would also count, right? But for the other things, if you're just quarantining, for other reasons, if you can telework, you can't take this. Okay, so this is only if you can't telework. Additionally, same thing. You get when you're talking about being actually diagnosed, when you're taking sick leave, 2 weeks, 10 days, 80 hours of paid leave under EPSLA. Same exact amount limits, $511 a day. But the difference is obviously you don't have a rate of pay to be able to determine how much you should pay. Okay, so instead, you're going to take your average daily self-employment income. What is that? Well, this is actually pretty similar to that PPP conversation that we've had, actually. Everything's going to harken back, and I'm going to use Schedule C. Obviously, if you're a partnership, things get a little bit more complicated. But again, it's similar rules to what PPP was. So it's similar to what that was based off of. So take your Schedule C, line 31, right? That's your revenue minus your expenses. Line 31 is your net profit. That's essentially what they consider your payroll. I'm guessing they don't say anywhere in there that I've seen like what time period. I'm guessing we would use again, like it'd be 2019. That's the only period you have a Schedule C4 that is kind of more official, right? So I would take that and divide by 260. Why 260? Because that's the number of working days in the year, right? Which is really funny because those of my self-employed friends know that's cute. That's cute. But yeah, if only we worked 260 days. So 260 days. So you take net profit divided by 260 and then multiply that by the number of days of leave you take. Again, maximum days is 10 days, right? So let's do a little example. So let's say your line 31 is $50,000 divided by 260. Oops. I can't do this one in my head. Divided by 260. That's $192 per day-ish. Times, let's say you take the whole 10 days. It's almost $2,000. Okay. So that's no small pennies, right? Like that's no nothing to laugh at, nothing to sneeze at, right? So $2,000. So again, up to $511 per day. So that is something, and this is something that a ton of self-employed people are going to miss, like the vast majority. Okay. So no, if you get sick or if you have to quarantine or if you're waiting, and you can't work, you actually legitimately can't work, you can take this. We're going to get into documentation here in a minute. Let's see. And I don't know. So Paige is asking me, what if I don't have a Schedule C from last year? You started your business in September. I don't know. I have not seen anything that really has specifically come out to describe what this means for people who are newer in business. So potentially you could do something similar to what you did before, which was take, maybe January through March or something like that, and average that over the rest of the year. But it's going to be a little tougher, specifically from a support standpoint, if you don't have that prior year to support to go off of. Okay. So, and real quick, let's finish off this conversation before I get into more questions. And I will talk about documentation here in a minute for both self-employed and others. But the last part here is self-employed individual is caring for a child whose school is closed. So this is the second part, right? Family leave. You have to take off because you have to care for a child. Maybe the school's fully online, etc. So again, it's the same thing. 2 weeks of sick leave, 10 weeks of the family medical leave expansion. It's going to be the same amounts, 2/3 of your average daily self-employment income, calculated the same way, right? So now you're just going to times it by 67%. So you're going to take your, let's say you're going to take your $50,000 that you make in a year times 67%, i.e. 2/3, right? And then you're going to divide by 260. So you make $128 per day times 10 days for the first one. Let's say that's $1,300, right? So it's going to be a little lower. You're not going to be paid as much. There's going to be different maximums up to the $200 per day, right? So make sure that you're paying attention to that, but it's going to be based off of the same thing. That Schedule C, line 31 net profit. That's what they seem to be sort of anchoring to in all of this legislation as your proof of payroll if you're self-employed. Okay, and then how do we get this though, right? So my self-employed people are like, but I don't have a payroll report. So how the heck am I supposed to get a payroll tax credit? You still pay payroll taxes, right? Remember that. You still pay payroll taxes. And you will be able to get this through a payroll tax credit to yourself, basically, for the employer portion of payroll taxes that you paid. The way that you're going to get it, you're going to get it on your 2020 taxes, right? We're like, great. So I get that money next April. Awesome. That really helps me right now. But that's true. That's true. But you're not going to sneeze at it next April. I'm guessing you're going to take that. So yes, you would get this as it would essentially lower your tax liability for your 2020 taxes. How you can get this now, specifically if you are a person that pays estimated taxes, right? You can take this into account when you're paying your estimated taxes. So if you know you're going to get a $2,000 tax credit, you can reduce your estimated taxes by that $2,000. A little scary for self-employed people, right? Because you're worried about being able to take that credit and all of that. I do think it's best to work with an accountant both now and definitely everybody. I don't care if everybody's done your taxes yourself forever and ever and ever and been fine. Get someone to do your taxes this year, please. And by this year, I mean 2020, because things are going to be bananas with all of this stuff going on. Bananas. And there are things that you can get like this that you want to make sure. I want you to have it on your radar screen because it's not necessary. Most tax preparers probably aren't going to bring this up because a lot of tax preparers don't even know this exists. But if you say, hey, I'm taking this leave, I took 2 weeks of leave under this, right? And I need you to make sure I get that payroll tax credit, they will look it up and do it. But I really, you need to be the one. Don't rely on your tax preparer to know this because a lot of them are not going to know this. This is going to be something, especially for self-employed people, that a lot of people are going to miss. And I don't want y'all to miss it because it's free money. Okay. Let me see what questions we got. Okay. Is the self-employed EPSLA conversation initiated with my tax accountant? Are they supposed to inform us when we prepare? You initiate that conversation. That's what I was just saying. You should initiate that now. Don't rely on them to do it. They're not going to do it. Okay. They are not going to do it. So let's see. So yeah, this is when you do your taxes in 2021. But again, it can impact you for your estimated taxes. If you pay estimated taxes, you can pull back on that right now and not pay as much, and you're not going to be subject to fines, hopefully. But again, working with a qualified tax preparer is important. And a lot of them are not going to know about this, you guys, I promise you. And I love this question. I don't do taxes. I'm working on a network though. So stay close, because I have a couple of preparers that will be on this. I'm looking to expand to even more. So by the end of this year, by when you guys are doing your 2021 taxes, my preferred vendor list is expanding. So I'm gonna have even more choices for people, and I'm gonna make sure that they understand all of this before I refer anybody to you. So if you wanna bookmark balancecfo.com/vendors, that's where all my preferred vendors are that are vetted. Those are my people. But again, we're looking to expand that and add to that to make sure we have a lot of really qualified people that can answer your questions. Okay, let's see. So Karina says, thank you. Your daughter's school already sent you an email saying she's only going to school in the fall for 2 days. So I can claim the tax credit for every week for the rest of the year that her school will be closed the other 3 days of the week. Yes, so you can add the days together. So if her school is closed 3 days a week, now again, assuming you can't telework, assuming, and I can see in the picture your kids are young, right? So yes, I think that's an easy thing to support that it's a necessary tax credit. Take that 3 days, and you can essentially so basically you get, I guess it's, 10 weeks, that's 50 days. So under FMLA plus the additional 2 weeks. So, you've got quite a lot to work with, but you're going to kind of, it can be over that time period. It doesn't have to be consecutive. So you can take that 3 days a week and claim that tax credit for up to 12 weeks total if you combine the two different types of credits that you can get. So yes, and I would definitely do that. Let's see. Okay. You guys are sweet. You guys are super sweet. I'm a CPA, but I don't love doing taxes, y'all. I didn't do my taxes until Saturday. Like, how terrible is that? I prepared for them, but I didn't actually do them and file them until Saturday because I don't like doing taxes. I can talk about taxes. Yes, you can reduce your estimated taxes. So if you work with an accountant to do your estimated taxes, don't expect they're going to know this. Tell them to go look up this, Families First Coronavirus Response Act, the paid sick leave that is available to self-employed employees. Send them to this page, for goodness sake. I have so many people that point their accountants here. This is on YouTube as well. So if you want to send this to your accountant, you send them the YouTube video. Hi, accountants. Love y'all. Okay. So asking to explain estimated taxes. So basically, if you are self-employed, you can wait until the end of the year to pay all of your taxes, right? Because you're responsible for your taxes. Nobody's withholding those. If you're LLC, sole proprietor, But really what you're supposed to do is not wait until you file your tax return to pay your taxes, especially if you owe. You are supposed to pay estimated taxes. They're quarterly throughout the year. Go check out. I gotta do it. Go check out. I have my Financial Fitness Basics course. I talk about taxes in it. It's a crash course. It's 3 modules, all the things you need to know if you're a self-employed individual or small business owner. We talk about taxes. I have a whole walkthrough in it that actually screenshots exactly how to pay quarterly estimated taxes and how that's calculated and all of that. I also talk about, financial statements, like what is a P&L, what is a balance sheet. I talk about, entity types. Are you the right entity type? Go check it out. balancecfo.com/basics. Somebody will post it. Somebody post that. Okay. All right. Let's see. Yes, right? I mean, that's the thing. So you can get this. This is how you kind of get it early. Let's see. And that's fine. You can do it for Q3. You can do it for the third quarter. You can reduce it. So your next quarterly tax payment, you can reduce if you already paid this one and you're due the tax credit. Okay. So really quickly, hang on, let me take this down. The last thing I want to show you, because the other question I get on this, and this is one that's really hard to find answers on, honestly, is what the heck do I need to show to support to get these tax credits, right? Because that's the obvious next question is, okay, great that I'm eligible for them, but like, what am I going to be required to show if I'm audited or something like that? So I found this, and I think that this is helpful. Hang on, let me okay. So I thought this was helpful. And I can post this as well. Thank you. Paige has got it. balancecfo.com/basics. Check it out. We actually have, so if you buy today, I'm going to give you guys just one real quick one. It's July 15th. If you buy today, there are 2 live specials that did expire yesterday. I'll give them to you if you buy today. Okay. Just today though. So FYI, you can get it on, I've got, it's a live workshop on QuickBooks tomorrow that my friend Courtney Boudet is doing. And then I've got a live Q&A you can get in on too, but you got to buy it today. Okay. Sorry, aside. So let's talk about what we needed to do to support this. So again, I don't know if you guys can read this, but this is basically talking about, you will need to collect the following. Again, this is something your employees need to ask for, or if you are self-employed, obviously you ask yourself. A little conversation with yourself, but you actually have to document. Your employee would typically document their name, the requested leave dates, a written statement supporting the COVID-19 related reason for which the employee is requesting leave. So which of those reasons listed are they requesting leave for? A statement that the employee is unable to work or telework due to such reason. And it tells you the 2 reasons. Again, it's either you're taking the sick leave or it's because of your family leave. And this was interesting. So this is a little bit of further on the employee side or on the childcare side. In the case of leave based on a school closure or an availability of a childcare provider, the name and age of the children to be cared for, the name of the school or provider, and a representation that no other person will be providing care for the children during the period of requested leave. Okay. If the employee is required to care for a child older than 14 during daylight hours, the employee must provide a statement that special circumstances exist requiring the employee to provide care. Okay. So that says, if you got an older child and you're like, I just kind of want to ride this out, and there's not, if your child has special needs, I'm assuming is what this means, or if there's special reasons that you need to, you cannot telework or you cannot work or you cannot leave this child at home, right, to work, you would have to document that. The employee or yourself, if you're self-employed, would have to document that, okay? And then additionally, employers should maintain the following records to substantiate the eligibility for the tax credit, documentation showing essentially how you determine the amount of paid leave, using those guidelines that we went over, documentation showing the employer determined the amount of qualified health plan expenses. So again, you can continue to pay their health plan, their health insurance, if that's what you normally do, and copies of the Form 7200. Remember, the Form 7200 is that form if you take all the payroll tax credit you can get, if basically you use up all the payroll taxes you're paying on that report and you still are owed more money, you file that Form 7200. So you'd have to, keep those copies. and your copies of your 941, which is your quarterly federal tax returns for payroll. Obviously, self-employed people, you're not going to have the last two. Those don't apply to you, right? Okay, and you need to keep it, it says, for at least 4 years. So again, I'll post all of this in the group. I'll make a post about this with the table and with this, so make sure you're in the group. Would love to see you guys over there. But yeah, so this is pretty much, this is the crux of FFCRA. So hopefully this is helpful. Let me know if you have any more questions. I have a couple more minutes if anybody has any more questions. And I'll go back through your questions. Thank you, Gabrielle. Thanks. Yeah, we've got lots of people in the course already. I'm getting really, really good feedback from everybody on it. It's the crash course. If you're like, I don't know what I need to know about I don't know what I don't know about, finance, accounting, taxes for self-employed or small business owner, it's a great place to start. I put it together because so many people told me that through this process of applying for loans and, figuring all of this out, they realized they didn't know as much as they wanted to or needed to know about their own business finances. So that is why I made it. Okay. So if I only work for 3 months in 2020 as self-employed and the rest I'm collecting PUA, I'm going to do my average earnings for only those 3 months that I worked as self-employed and not use the overall earnings, including PUA. So I think you actually use last year's earnings. So as your basis, right? Because this year's going to be all wonky for a lot of reasons, and they know that. So I think what you actually are going to do is go back to last year. And I think I can't remember if you were the one who was saying, I don't think so, that you just started last year. But in most cases, you're going to go back to last year, and that's how you're going to kind of average out what that is. So this is a great thing. So for that point, right? Now, if you're on PUA, you can't take this at the same time. That would make sense, double dipping, right? But here's like the ideal world that I can see if you were to be able to like maximize this out for yourself. Okay, maybe you take PUA till when you start working again, or until that $600, again, talking to my self-employed people, or when that $600 rolls off. Okay. Now, if you can start working before that, great. Then you probably are already off of PUA or have those benefits rolling off. When you roll off of that, or when you're no longer taking that, that's a great time to start taking your essentially 10 weeks of pay that you get for PPP being self-employed. Okay. So take that pay. So take your unemployment, take PPP when you start working again, or maybe when your unemployment runs up, right? And PPP would make more sense. Take that for 10 weeks, okay? Then if your kids are home and you're online schooling and you have no other option, then you can take your paid sick leave or FMLA leave, right? Or both. And that's another 12 weeks, okay? So that can go, and again, that's gonna be one, like you don't get that money up front, you'll get it later, or you reduce your estimated taxes for it. So it's not the same as PPP where they're going to hand you money, or PUA where they're going to hand you money, but you're going to get it back later on your taxes, right? Or pay less in estimated taxes. So that is another part of what you can do. Okay. Now, what you may run into if you do a lot of that, obviously you're only going to get a credit for the total amount of payroll tax that you actually paid in. So if you, in the full year, right, didn't pay in the amount of credit you're trying to take in payroll taxes, then you won't be able to get the whole amount, but you'll be able to get something, right? So wouldn't it be great to be able to completely eliminate the payroll taxes that you have to pay? It's up until the max of payroll taxes that you pay for the year. Okay. All right, Shauna, I have an employee who was exposed. Here, I'm going to get rid of this real quick so you can see more of my face because I'm tiny. And now you still can't see my face. I have an employee who was exposed to someone who has COVID-19. This is like that tertiary. Okay. He is now home for the time being. Do we just continue to pay him like normal? So I don't think this would count specifically unless a healthcare provider has said, yes, you need to quarantine. Now you'll notice I didn't see anywhere in here that they're going to require, and I think there's some HIPAA issues probably with it, or, various different privacy issues. I don't think as an employer you can require proof Again, not a lawyer, hashtag not a lawyer, y'all. So, I don't know this for sure, but I haven't seen anywhere that they're going to require like proof. But again, the employee has to be the one who's representing to you to say, look, this is why. And that, yes, a healthcare provider told me to stay home, or et cetera, et cetera. I don't think that tertiary exposure. Now, if they had been directly exposed to a person who confirmed had it, I would still have them like contact your healthcare provider and at least get them to say, you need to stay home. I don't know, just to be like on the safe side about it. But I don't know, I don't know where this stops, right? We're at this point now where like there are so many different interactions and things like that are happening that it's hard to know. So in that case, I don't think that the payroll tax credit would apply unless it was specifically they were told by a healthcare provider that they should stay home. They would probably have had to have been in contact or have symptoms or something like that, which is really unfortunate too, because you kind of like, you want to encourage people to do the right thing right now, right? Like you want to encourage people to stay home when they might be sick. But at the same time, it's kind of that push-pull of like also wanting to make sure that the rules don't get taken advantage of. So, okay, so it looks like that's the questions I have. I might have missed some, but if I did miss your question, come on over to Financial Literacy for Women Business Owners. Even my guys, come on over. We have some great little crew of guys over there too. balancecfo.com/group, or just search Financial Literacy for Women Business Owners on Facebook, and you will find us and come on over and join. As far as whether you pay him, so this is the same person who asked the previous question, Shauna, you can pay him. Like this goes back to then your own internal policy for paid sick leave, right? So it is up to you. You won't get a payroll tax credit for it likely, but you can still pay them, but you're not obligated to. So that's really what this is this is showing you what are you obligated to do and then get a payroll tax credit for. But a lot of you guys may have had your own paid sick leave. So you can make it broader. You're just not going to get a payroll tax. You can still say, hey, you need to stay home because you've had a potential exposure, but may not be close enough to actually be able to get this tax credit. But that's up to you then whether you're going to pay them or not. So yeah. So, okay. Let's see. So wait, one more question here from Eileen. This question's a little off topic, but I need to know if I get PPP loan, can I claim my PPP money on my, so that's a whole separate topic. I've talked about that a couple of times on some of my other lives. Make sure you're subscribed to my YouTube channel. I'm trying to think about the most recent time that I talk about that in almost every live, I feel like, about, it depends on your state, essentially. Go back and check out my live from last Wednesday, the Q&A that I did. I think I talked about it then, hopefully. Hopefully. Okay, guys, I will talk to you later, and I hope that this was helpful, and I'll see you over in the group.